Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.exchange. First, let us see what happened last week. Usually, October is a bullish month because of festivals in India and even in US also. Usually, September is a very bad month and October markets used to recover. But in case the problem continues, the October can be a brutal month. In 1986, the Dow Jones fell more than 30% in just one day in October month only. So, October month is usually good, but very rarely it can be brutal. So, US markets, the last week alone, S&P 500, Dow Jones, as well as Nasdaq 100, they all fell nearly 3% in just last week alone. And now, Nasdaq 100 as well as S&P 500, both are down more than 10% from the recent high. So, officially they are into correction territory. So, 0 to 10% fall is considered to be a normal fall, 10 to 20% is considered as a correction, more than 20% is considered as a bear market. So, now US markets are looking really very bad. And Indian markets also not really very good. So, Nifty has fallen about 2.5%. And that is despite nearly 1% recovery on Friday. So, otherwise as of Thursday, it was more than 3.5% fall. So, at least we had some recovery. That whether that's a recovery will sustain or not, that's $1 million question. So, we'll come back to that later. Now, coming week. Okay, first let me talk about the month. November month is a 5-week series. So, 5-week series usually is a longer series, so markets, it will be slightly difficult to predict because if it's a 4-week series, there will be only 20 trading sessions. 5-week series, there will be 25 trading sessions. So, that's about 20% more trading sessions. So, that's one thing. Second thing, the markets have fallen so much in the last 1 or 2 months, and now the Nifty has fallen more than 1,200 points. At the lowest point, it has fallen even 1,350 points from the recent high. So, technical bounce is not ruled out, but the markets are definitely not bullish. So, they are bearish only. And I am expecting, so this month, the range can be very wide. It can be from 18,000 to 20,000, so anywhere. But however, looking at the open interest, 19,500, 19,600, 19,200. All three calls were written aggressively. So, that shows that 19.2 is the first resistance, 19.5 is the second resistance, 19.6 is the third resistance. On the downside, 19,000 put, 18,900 put, 18,800 put, all written aggressively. So, we can say the first support, second support and third support. So, for coming week, my view is that 18,800 on the downside and 19,600 on the higher side. But 18,800 is where the recently market took support. So, the people strongly believe that, so that will not be broken again. But if that is broken, then Nifty can slide another 300-400 point very quickly. So, that is the view right now, looking at the open interest. There are lot of corporate results are due. Larsen & Toubro, Hero MotoCorp, Tata Motors, Tata Steel, Bharti Airtel, State Bank of India, Titan, Sun Pharma, UPL, Tata Consumer, Adani Enterprise, etc. So, there are many Nifty 50 companies that are set to declare results this week. So, therefore, the stock specific action will be more rather than the index level movement. On Friday, US markets fell and the US VIX closed above 21, and that is the highest closing for the last few months. Okay, the fear is extremely high. That may be because of geopolitical tension. So, in fact, for the last 3 weeks, I have been observing the US markets. On Friday, there is an extreme panic, and then if nothing happens significantly on Saturday and Sunday, then Monday that fear subsides to some extent. So therefore, though markets closed lower on Friday, but if there is no significant flare-up in geopolitical tension over the weekend, so Monday morning, things can be slightly better than what it was on Friday night. So in that sense, tomorrow we may open down, GIFT Nifty indicating more than 100 point, about 120 point gap down, but we may open up around 80 to 100 point. So like falling 80 to 100 point is considered to be a normal, but more than 100 point gap down is not actually a normal one. Now, global markets will be focusing on US Fed meeting, and just now I tweeted, as and when Fed chairman speaks, the US markets fall. In the Fed meeting, Fed is expected to maintain the rate of interest. There will be no rate hike, but what Fed chairman is going to speak after that, so that can damage the markets. So just now I tweeted saying his name has to be changed from Fed chairman to bear chairman. So now he has become a good friend of bears. And at this point of time, I must tell you, the Bill Ackman, the famous short seller in 2008. So he bought put options whose contract value is about 1.6 billion about 2 months before. Now the markets have fallen about 10% from that level. So one needs to have such a high conviction to buy put options worth millions of dollars. The contract value is 1.6 billion, not the premium. The premium he paid is something about 200 to 300 million US dollars. So now he must be sitting with a good profit. Now things are not really looking very good. Okay, first let us see the bear case scenario. Number one, FIIs are selling. FIIs are selling continuously. FIIs are selling relentlessly. So FII sold for more than 25,000 crore in September, and then again more than 25,000 crore in October. So this huge FII selling is there, number one. Number two, the US market has come into correction territory last week. The first Nasdaq 100 came into correction territory, later S&P 500 has come into correction territory. The Dow is very close to correction territory. Another 0.5% fall, that will also coming into correction territory. A fall of more than 10%. And the third, geopolitical tension. So this Israel-Hamas problem continues into third or fourth week. And then 5 state election uncertainty next month. And then not so impressive corporate results. So these are the 5 cases for bears. But now, the bulls reply for these 5 questions. Okay, the first question, FII selling. Yes, true, FIIs are selling. So what? Whatever amount FIIs are selling, equivalent amount domestic institutions are buying. So when you are looking at the prices, so how much has been sold, the same amount is being bought. So the markets are falling due to sentiment. When the sentiment turns around, the markets may go higher. So if there is a net institutional selling, then there is something to worry, but FII selling is equally matched by domestic institution buying. That's the first one. And the second one, and US market is in correction territory. Yes, US markets have been falling. It's in correction territory. There is no doubt about it. But however, in the past, as and when the RSI, Relative Strength Index, when it fell below 30, the uniformly markets recovered in the recent past. I'm not talking about Lehman Brothers collapse or coronavirus, but in the recent past, the 2 times US markets recovered, and that too one time when it actually closed below 30, the following recovery was very powerful, and S&P 500 shot up nearly 4 to 5%. So because the RSI is below 30 and it seems to be oversold condition, there is a possibility that US markets can reverse, can even shoot up 4 to 5%. The third one, bear case, is geopolitical tension. Geopolitical tension, what is a geopolitical tension? It's a Israel-Hamas. Israel-Hamas thing has been going on for many decades. What happened after the Russia-Ukraine war? So, Russia-Ukraine war and the knee-jerk reaction, markets fell for a few days. But then, what happened after 1 month or 2 months or 3 months? The markets were significantly higher. So, the same way, this Israel-Hamas conflict will also be forgotten maybe after 1 or 2 weeks. Okay. So, geopolitical tension is not really that big because the markets have already fallen and it has already been factored in. And then, bad corporate results. Now, as a teacher, I used to tell, if a student is being punished by a teacher, I used to tell, the punishment should be proportional to the offense. So, just look at the Google, for example, came out with the good results, revenue higher than expected and earnings per share higher than expected. Just because one segment of the business, cloud computing, is not doing well, the stock has fallen nearly 13% in just 3 days. And this kind of fall is the worst fall since the COVID situation. So, true that the results may not be very good, but the thing is, the stocks are falling, more than what is required. And same thing here. And there was nothing wrong with HDFC Bank results. On the day of the results, the markets went up, but now it has fallen nearly 15%. Right? So, same thing with the Reliance Industries, so many other stocks. All the top index heavyweights have fallen more than 10%, some cases 15% also. So, the corporate results may not be good, but the fall is actually much more than what is required. Right. So, these are the bull cases. Now, the 5-state election. 5-state election, most of the people know what is going to be the outcome because, we see the opinion poll results and we know more or less what is going to be the results, and that is more or less been factored into the markets. Now, what is more important for the bulls? This series started with FII long short position. So, FIIs are short 82% in index futures. They are long only 18%. So, in the past, as and when the series started with more than 80% short, and uniformly in the next few weeks, markets moved higher. So, this is actually the biggest hope for bulls. So, this series started with 82% short position. In fact, if I am not wrong, this should be the highest short position in the beginning of any series, at least for the last few years. So, as and when people are like hugely short, okay, now look at the reason. Suppose market is falling. This 82% of the people are in profit. They are tempted to book the profits. So, when they book the profit, markets may recover. So, there is a cushion on the downside. But in case market shoots up, only 18% are in a profit, 82% will be in loss. So, when the short covering comes, so they have to put a stop loss. When the stop loss hit, so there will be a more buying momentum that can take the market higher. So, normally, 55 to 65% short is actually good. Of course, we cannot just discuss only based on the future position. So, those future position, they would have done for many reasons, So, probably, so somebody having a portfolio and if he has shorted in future, when the market goes higher, in index future, he may be losing, but then his corresponding portfolio may be doing well. It's not a standalone business. Where the people would have shorted, they would have sold a put option. So, when the market goes higher, that can give buffer. So, they need not be scared, So, there are n number of things can come into the play, but, generally the observation is that as and when more than 80% short position in the beginning of the month, so that month in the next few weeks markets moved higher. So, that is the biggest hope for bulls right now. Reliance Industries came out with results, but not really very good. But these are like, ultra large cap stocks. They can't grow 30%, 40%, So they are all matured industries. So they will grow only slightly only. So US, the GDR, Global Depository Receipt of Reliance, it was almost flat. Of course, there is no much liquidity, but if there is any adverse impact, that would have been reflected in GDR, because some people would have taken position there, counter position for Indian position. So that has not happened. So therefore, tomorrow Reliance is not likely to make a big impact in the index. So looking at things, so tomorrow we are likely to open maybe 80 to 120 point gap down, and the gap down may not sustain. Markets may stabilize at some point of time. The domestic institutions may come to support. So, but now the only worry is that Friday Nifty closed above 19,000, but tomorrow it's likely to open below that. So anyway, markets, you will be waiting for like few normal data, something like monthly auto sales data, which is bound to be good because of festival reasons, cement sales data, manufacturing PMI data, services PMI data, the US Fed meeting, then US non-farm payroll data. So the first 1 week, there will be a lot of data, and but Indian markets don't react much to the data, but US markets react. So in US markets also will be keenly watching for Apple results on Thursday, and that's, you remember, Apple has the huge weightage, 12% weightage in US indices. In Nasdaq 100, Apple has 12% weightage. So therefore, the markets are clearly bearish, but the bottom is not far from here. So that is the opinion. But however, I will change my view if 18,800 is broken on the downside. So I have given some trading strategies. If you are bullish, if you are bearish, what you can do yesterday in my Twitter. So if you have not seen, you can go to my Twitter account and can see those strategies. But remember, I am not a SEBI registered guy. I have not taken any money from anybody. So this is just for, for some education purpose. People like troll, when we say education purpose, but what else we have to say, right? So if you are taking a position, consult your financial advisor and also know how to hedge your positions. Hope you enjoyed watching this video. Thank you for watching.